Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Back at the desk after being away on our President's Cabinet trip last week, and I got 2 videos out from Belize, so thanks for all the engagement on those posts. Sorry, I'm at my boring desk in Corona. Next week we'll be in New York at the NBA's secondary conference. It is a world-class event in Times Square in New York, so should be able to get a video out on Monday night from somewhere cool. And this Thursday I'll be back at the boring desk again. Speaking of NBA, they helped remove, among many groups, obviously, the DTI LLPA, the debt-to-income loan level pricing adjustment that was going to be super problematic and totally unmanageable. Every Monday we have an executive call with the NBA, and we get the lowdown. And I'm not supposed to talk about what we talked about, but I will tell you that the lobbying efforts from the Mortgage Bankers Association are world-class. And there are a lot of great organizations in our industry that have lobbied against this, FHFA policy, pending policy, which was delayed and then now removed. And I got to tell you, the meetings that go on continuously with FHFA, showing them over and over again. It's not just sign a petition, send it. It is ongoing dialogue. It is inroads that have been built over years. And this was a really big one. It's a big win for the industry. So we all won. That was great. So thank you to the NBA and obviously all the other organizations that took part in removing that DTI cap. And I noticed a headline on one of the articles today. Our friend Chris Whalen over there at the Institutional Analyst, he is a hammer. I love that dude. He's on point. He immediately said, well, now that we got this DTI thing removed, let's start talking about the credit report and how problematic that's going to be for the industry to implement. So stay tuned. It'll be interesting to see if that comes around. But let's digress for now. Happy Mother's Day to all the moms. It's a great day to show the moms that their job is hard, it's tough, and we know it and we appreciate it and they're loved. And obviously, wouldn't the pampering be nice if they could have that every day? But unfortunately, kids ruin everything. And I have 4, I can attest to it. But Mother's Day is also a sad day for those that have lost a loved one, have lost a mother or a stepmother or mother-in-law, or even a spouse that is a mother of your child together. So let's think about those people out there that have lost a mom. And don't forget, because it can be a downer and a bummer on that holiday. So we're thinking about you. You know who you are. We love you. And we definitely don't want to let things go without being said. But there are some of those out there that need their friends to support them and say they love them. So, all right. Now, who else needs love? Argentina. The Central Bank of Argentina raised their equivalent of their Fed funds rate 600 basis points. Okay, so 6 points in one move. And guess, now remember, we are at a 5 to 5.25. So 500 to 525 basis points total. So 5 to 5.25% Fed funds rate, okay? The interest rate after moving up 6 points, 600 basis points, is 97% in Argentina. 97% Argentinian Fed funds rate. I mean, they won the World Cup. I don't know how they got inflation out of hand so bad. It's 109% inflation. Now, we have a target of 2%, and we're hovering in that 4.9, depending on which report you look at, maybe 5.2. Are we going to stay higher for longer? So there are a lot worse problems out there in the world when it comes to inflation. But we seem to be taming it. However, there's this kind of push-pull battle when you watch the 10-year, which I've been watching since 2003 in the industry and since 1994 as a freshman at UT studying macro. We're range bound. our interest rates are range bound. Now, we've generally come down, obviously, since the peak, November 10th. We had our first real big CPI report that came out that said that consumers are paying less for goods and services overall. And goods have come down quite a bit. Obviously, used cars, and you saw manufacturing data came out this morning. It was in contractionary territory. Hell, I mentioned last year this report about the Chinese PPI, the producer price index, their version of inputs to create goods and services. When it comes down about 2 months later, US PPI and inflation continue to come down. And Les Parker from the TM Spotlight, it's a great newsletter. If you don't subscribe, I suggest you do. He brought that point up against something that I've been watching and sharing with you last year, that the Chinese PPI is coming down, and that has a global effect. And so, there's a big shakeup going on, right? Inflation's coming down, jobs still remain stubbornly high, and the economy is resilient. Maybe we're in a recession, maybe we're not. The GDP is still not negative for 2 quarters in a row, and I know that's not the new version of what a definition of a recession is. This economic review board is supposed to tell you like a year later that you had 2 recessionary quarters in a row. But the GDP reports we keep saying are showing growth, although it's moderate. So we're in this little range. We got slowing growth. We've got jobs being created. Jobs are softening, but wage inflation is still there. Inflation is coming down, but staying sticky. So, no one really knows what to do. But this is part of the bottoming process, and it takes time. And these things don't happen overnight. And I'll tell you what else takes time: for people to look at their business models and decide whether to stick with it or get out. And I'm not just talking about our business. I'm talking about many industries. I subscribe to StockTwits, and I get a daily newsletter from them, sometimes 2 on the weekends. And I'll just hit you with some headlines right now. Again, these are all signs of the bottoming process, okay? Check out these headlines right now, all right? Activist investor Engaged Capital is looking to shake things up at Shake Shack. So they took a roughly 6.6% stake of the chain, and they're pushing the board to make changes to double their profitability. Analysts downgrade SoFi Technologies. So ex-Goldman gentleman, Anthony Noto, CEO, he buys $505,000 worth of stock to show that he's doubling down. Data storage giant Western Digital rose 11% based on rumors that a Japanese computer memory maker are picking up steam for a merger. Okay, the world's largest gold miner, Newmont, is expanding copper operations by buying Australian miner Newcrest. ONEOK is buying its rival Magellan, which is a midstream oil and gas pipeline business, for $19 billion cash. We saw the banks being bailed out. We've seen 3 major banks being bailed out. We've seen M&A in our business. We've seen some companies say, you know what, I'm just going to fold up and go into another company. Now, those are private companies that are kind of merging with each other. So not necessarily giving up, but just kind of going for a strength in numbers approach. Then you've got your hedge fund and your publicly traded companies that are pulling stakes and saying, I'm out. And you know what? It's May, but last year, around this time, lenders started losing money. We were fortunate to make money through Q2, and we're back to making money again this year, which is great. Not counting servicing. Of course, servicing offsets everything and everything's fine, but that doesn't really count. But from an origination perspective, companies that lose money for a year sit around and go, hey, it's been a year. Why am I in wholesale? I'm chasing these leaders that are putting out a loser price, and I'm a bank, or I'm a hedge fund, or I'm publicly traded, or I got other problems to deal with, and I don't want to lose money anymore. So you're going to see some more activity. And the second half of the year is generally slower. So M&A is part of a bottoming process, and there's a lot of it going on. Speaking of that process, remember when the Fed came out and said they're going to let up to $35 billion in mortgage-backed securities run off their balance sheet? Well, they haven't really been doing that every month. Okay, I think they said 21 billion they did in October, but their average has been 11.9 billion. They have 2.6 trillion in MBS. I mean, that's massive. It will take them 18 years at that pace to run off all of their stuff. By the way, OpenAI, ChatGPT, the CEO is raising $100 million to create another crypto coin called WorldCoin. Foxconn is setting up shop in India. They're investing $500 million to take some expanded space away from China because, we've got this kind of shifting of the global powers after everything's going on. And Bank of China is even talking about making some moves with their private money. So lots going on. Credit makes the world go round. There's like way more credit in the world than cash, but credit's tightening. So this whole bottoming process is taking place. Get back to you this week. Cheers. Hey, it's KP coming to you live from Corona, California. Well, we are off to Manhattan next week, and the Mortgage Banker Association National Secondary is taking place. So I've got one of the only flights direct out of Orange County on American to JFK Sunday afternoon at 1:30. So I'm going to miss a birthday party with some friends, this and that and the other. You guys don't care. I'm here to serve you and not talk about me. And speaking of servants, Robbie Chrisman, the son of Rob Chrisman, you see the Chrisman blog every day, he is just now pedaling from Manhattan through the Appalachian Mountains to Chicago, which is pretty cool. So I thought that was awesome, and hat tip to him. And I saw Rob out there giving his son some love. So I thought that was great. So what's on my agenda for the NBA in New York, the National Secondary in Times Square at the Marriott Grand Marquis? It's traditionally where it's held every year. Hopefully the Times Square is a little more cleaned up than it was last year and a little crazy. But meetings. The NBA has great speakers. I'm not even get in until midnight pretty much, so I won't see anybody Sunday night. But on Monday, one thing I'm looking forward to is I'm part of an NBA Executive Roundtable where we will get to speak with FHA Commissioner Julia Gordon, Ginnie Mae President Alana McCargo, and the FHFA Deputy Director Naawa Tago. So 3 high-powered females working for the government, setting policy that affect you and I. And so it's great to be part of that. And not sure what I can talk about. That's behind closed doors. I have to sign all this stuff, but I'm sure it'll be fruitful. So lots of changes going on in our business. And then tomorrow morning, the Mortgage Collaborative in the morning, in about 9 hours, less than 9 hours, we have a roundtable discussion with Fannie Mae. And we'll be talking about things specifically related to the new credit reports, changes that are being implemented starting in Q1 of next year. Adios, amigos. Gracias, amigo. That's our cleaning guy. I give him bottled water every night when he comes through here. And it's like the only way I get to practice Spanish. Real cool deal. Anyway, my saying to him is, mucho trabajo, poco dinero. So if we break down how much we work per hour, it's pretty low. I think even Elon Musk said that the other day. Pretty cool interview if you didn't see that. All right. So NBA, lots of stuff going on, tons of meetings, tons of happy hours. It's just crazy. So I'll report Monday night. I'll do a video from there and then back to the desk Thursday. Okay. I read something cool in the Chrisman blog that I had not read before. Now, so we buy and sell money, right? And mortgage-backed securities, fixed income securities, treasuries, all those kinds of securities that are seen as safe bets, right? When things are a little uncertain, we talk about certainty versus uncertainty when it comes to investing money. Although people seem to be pretty certain that Facebook, Meta, Alphabet, Amazon, Apple, and Microsoft, the FANG stocks are the safe bets. There's been a lot of money in there. And so I'm not a financial advisor. I'm not responsible for your losses, only your profits. But sometimes those rallies run out of steam. And it could be something like this debt ceiling debate that there's been positive news this week. Comments from the Fed this week make people, think one thing or the other about the next upcoming Fed cuts. But as we get closer to June 1st, and if there's not a debt ceiling agreement created or achieved yet, you might see the markets get a little skittish and then money come back flowing into things like mortgage-backed securities or treasuries. Although right now, treasury yields have gone up above their 200 moving day average over 3.6 at 3.63 where they closed today. The thing I read in the Chrisman blog was like the 4th largest ever MBS, mortgage-backed security offering put out to the market. So it was crazy. It said, I have to read it because it's so complicated and technical. I want to break it down for you. But it says basically Prices on the front end of the yield curve were weighed down by the better than expected data, and long end yields were pushed up by Pfizer. Okay, Pfizer, they make drugs, right? Big pharma. $31 billion duration heavy multi tranche, fourth largest ever offering of bonds. And so that was something that was put out yesterday. On Tuesday, they didn't quite know that it was Pfizer, and it was interesting. They were talking about that bond offering that was out there was like one of the largest ever, and they talked about it. So they put what was called an MBS bid wanted in competition, so a BWIC. So basically, Pfizer puts out this bid, and then there's all these rounds. I mean, it's such a big package, including mortgage-backed securities in it, that it's kind of a bidding process. And so remember, we buy and sell money. So if there's a whole lot of mortgage backs being forced out to be sold, well, that there's extra supply. The demand was good. So this battle of supply and demand, buying and selling money, does impact our rates on the daily, literally minute by minute. There are people in hedging rooms that literally look at the MBS market, how it ticks up and down like second by second. It's crazy. Usually the rooms have no windows and like tons of monitors. You should see some of these hedging facilities. It's pretty crazy. So I thought that was interesting to see this really big mortgage-backed security package come on. And, there are a lot of assets being sold by large institutions because, they're trying to clear out their balance sheets, get liquid, and not have these duration products, these things that are, maybe they're getting a good price for that for Pfizer. It's good enough for them. Maybe it's a loss for them since they're marking it to market, maybe not. But it's in their strategy to get more liquid, to get more cash. I had a cigar yesterday with my good friend Martin Warren and Rich Lane over at United American Mortgage, Martin Warren at Nations Direct. And last night we were talking, and Martin said a guy he knows, a friend of his, a fellow dad from his son's football team, had 2 months left on his Porsche Taycan. Okay, this is like first world problems. But hear me out. So US Bank, which bought Union Bank, called him and said, "We'll buy you out of your last 2 months. Like, we'll take you out." So that's a sign that banks are just trying to clear loans off their books. They're trying to get these older loans at lower interest rates, and maybe maybe aren't as good at deposits leave a bank. Then you've got to sell assets, and maybe you can't get the price you want when you're forced to sell it in a time of distress. And I'm not in any way saying that US Bank is in distress, but if a bunch of deposits left any bank, like 42 billion left Silicon Valley Bank in 24 hours, you have to offset those deposits leaving by selling some assets and getting things off your books. And you may not get the price you want because you have to do it right away. And so it's interesting to hear that tidbit. So sharing it with you. Thanks to my buddy Martin out there sharing that. Okay, so what else is going on? There was some awesome breakdown of existing home sales. I saw it like on MBS Quote Line. I saw it here, there, everywhere. My favorite breakdown, of course, is Barry Habib when he broke it down on MBS Highway. So 4.28 million annualized pace for existing home sales, down 23% year over year. Now, as we get to the second half of this year, we'll be removing comps from last year where things were not selling last year. Median home price is up 3.5% month over month, 388,000, down 1.7% year over year. There's 1 million units in inventory of existing homes. We're at 2.9 months supply of existing homes. That's down from 4.6. Don't have enough supply. The demand has overtaken the supply. 22 days on market for existing homes, down from 29. And 73% of deals were sold in less than 30 days, up from 65%. First-time home buyers made about 29%, cash buyers 28%, and investors 17%. Crazy. Fed people were talking all week this week, and the chance of the Fed futures with no rate cut coming up at the June 14th meeting was 83% a week ago. It's now down to 66.7%. So maybe if the inflation stays higher for longer, we get some more inflation reads. We've got, maybe the Fed will raise another quarter. It'll be interesting to see that. Retail sales were okay, only up 1.6%. That's not keeping up with the pace of inflation. So, our economy is consumer-based. Walmart came out and had their biggest earnings miss in 2 decades. Target came out and said that the consumer is stressed, but they are noticing that there are some challenges, but they did beat their earnings. And then Walmart, 60% of their money comes from groceries. I remember they didn't even sell groceries before 1988. Remember the hypermart? They got rid of that and they went to the supercenters. They beat, but people are trading down. Their line of groceries, Great Value, is the single biggest grocery brand in America. 25% market share at Walmart grocery store. See you next week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.